Hi there, traders. This is Brad Gilbert with the FX Market Insight for Wednesday, the 24th of July. All right, now we have some interesting developments as we head towards the ECB meeting tomorrow. Now, what we've got at the moment, I've just been looking at this the last sort of week. This goes back to last Thursday where the Fed's Williams, the second in charge at the Fed, came out and said they needed a very aggressive rate cut situation. Now, the dollar sort of crapped out. There was a big anticipation of a 50 basis point cut. Now, that's all been wound back through a bit of Fed commentary on the Friday and even sort of this week subtly through the market. And what that's done is it's really flipped, to me, the central bank sentiment, right? So the Fed, right, so impacting the US dollar, went from being sort of, a little bit dovish to very dovish back to, say a 0.25 cut. And to me, that is actually a bit of a flip from a negative back to a sort of neutral stance, because that 0.25% rate cut is already factored in. So what that does is it puts the dollar back into a pretty much a neutral stance, right? The cut next week is fully anticipated. That's all done. Now, the rest of the economies, they're sort of sitting still quite dovish. So to me, I think there's a good argument for really coming back to look at the euro, or the ECB, the Bank of England, the RBA and the RBNZ, and highlighting that they are right now still somewhat negative or dovish in comparison to the Fed. All right, so that's where I think things have popped up. Now, as you can see, the dollar index is just popping a little bit higher on the hourlies and dailies. It isn't racing away with anything, especially with the ECB coming up. But you know what? It has broken those resistance levels. And because here, once again, you can see dollar yen and dollar Swiss, the two safe haven plays, are pretty much just trading sideways. So that tells me this isn't a dollar move, right? If it was a dollar move, all the dollar pairs would be exploding to the top side, and they're not. Okay, so what's the catalyst for the move? Well, it's pretty easy to work out. We've got euro, right? It's starting to really show its weakness, right? The European economy struggling. There's not a hell of a lot going on. The anticipation is the ECB may come out with extra QE, quantitative easing, and some other measures to really try and get the Eurozone sort of going again. So that's what we've got at the moment. Today's market conditions are dominated by euro weakness, not dollar strength. Now, when you understand that, it enables you to attack the other currencies. So euro is the main driver here for the weakness. Now, this is how fickle the markets have been, and it's been somewhat difficult, remaining patient, waiting for the opportunities to pop up. Aussie and Kiwi yesterday were sort of breaking higher. They've now drifted back down into the range, and also even on the daily side of things, they're just back into the range again. So once again, we're getting these false starts across the board, and it's really, baffling traders what's going on. What we need to see is what the ECB do will be the main feature over the next sort of 48 hours. Now, this is going to be very important, not only for the euro against the dollar, but all the euro pairs, right? Now, it'd be a bit rude of me not to congratulate Boris Johnson, the new UK PM. We do have, on the hourlies, we do have sterling sort of drifting a little bit lower, but it hasn't broken down through recent ranges. So to me, it's still sideways. But on the daily and the weekly charts, it has come a long way since Brexit started, and it still is pointing downwards, right? The Bank of England are going to have their hands full, especially as Boris comes out and proclaims that they will get Brexit done by October 31st with the deal or no deal. Okay, and as you can see, the media outlets are loving this because it gives them something fresh to post. They've got pictures of Boris up all over the place. So that's the main catalyst. Now, if you look behind the main pictures of Boris here, you'll start to find where the real information is. Now, for those crypto fans out there, the Swiss Watchdog, another central bank, having a look at or regulator looking at Facebook's crypto experiences. And then you're looking at, this is the stuff we're really looking for. China trade talks, right? This is not out of, it hasn't been done yet. Like a lot of people are saying, well, I haven't heard anything about the US-China trade issues. Well, it's still there. It's simmering away. Now, once this initial euphoria of Boris taking over gets done, we'll start to look at the other geopolitical events. and you're looking at the Iranian issue, that has still not gone away. And then also you've got Trump's back in there. Mueller, he's back into the US House hearing. You can be sure they'll be trying to get him to roll over on Trump, although Trump's done his best to distance himself from Mueller, throwing him under the bus, and then, sayonara. So that's what we got. So dollar hits to 5-week peak on debt budget deal. Yeah, great. I mean, that budget deal was no big deal, right? The US kicking the debt can down the road. They've been doing it for decades. So that was no major deal in my eyes. And the news services are sort of clutching at straws. So when you come back to look at what's going on, as you can see from the various services there's not a hell of a lot to tell us why euro's falling. And to me, it's just because of the winding back of that very aggressive cutting sentiment from the Fed back to that 0.25, which is already factored in. It leaves all these other pairs susceptible to a move to the downside because their central banks are in a world of pain, unlike the Fed, which looks like all the economic data has been pretty good. So to me, I think this is going to be a one-cut situation, and then I don't think the Fed will be doing much after that unless we see some significant change in the data, which to me, the way it's been coming through quite strong would be rather odd. Now, let's just have a look at where the major currency pairs are. Now, this is what I'm talking about. These currencies haven't really gone far, right? So Aussie, just drifted through that weak short-term support. Dollar yen just drifting up, like 15 or 20 points through that sort of resistance level. This is where euro started to move down through 112, the figure. And once it broke down through 111.60, we had another bunch of stops triggered. But look at this, it just hasn't gone far. Like they're just taken out a few weak stops around 111.50. No one is going to get super involved or commit to being short euro ahead of the ECB without knowing more information, right? So to me, I like the move. I think euro should be at 105. But right now, we've had so many false starts. We want to see either a bit of dollar strength or a bit more specific euro weakness to get into that trade. To me, it's just not happening just yet. Here's sterling. As I said, just still trading within recent ranges here. So, you know what? I wouldn't be surprised to see some, once Boris sets his cabinet, I think we'll see, potentially some strength in sterling. This is going to come back at some stage. Now, dollar CAD, it's had a bit of a run of, second tier data, which was really weak. And oil's falling back to $57, which means the pressure off that Iranian situation looks like it's easing. It's just sitting up here, up towards 130, 150 sort of resistance, 40, 50. It's a bit of anyone's guess at this stage. I'm sort of really finding it hard to sort of grapple the current consistent momentum of dollar CAD is shifting so much. It's pretty hard to sort of track. So what do we got here to look for today? Well, there's not a hell of a lot coming out, as we know. It all kicks off tomorrow. We've got the RBA governor. If I just swing you back to the MyFX Trading Hub, what you're trying to do is piece together an opportunity where we do have general direction and momentum. So already my interest is very peakeed with euro. This is starting to shape up very nice. Now, if I just scroll down just a touch, just to get the upcoming events, what I'm really looking for is obviously this situation here to give us clarity around what the ECB are going to do. Now, Draghi's told us over the last couple of meetings, they are preparing some measures to get the Eurozone moving again. Now, I don't know what they are, but it's going to be pretty weird left field stuff. So that may come out now, and that'll be the catalyst for the big move down in euro. Now, at the same time, we are looking for confirmation of that bearish outlook from the RBA. So just keep an eye on the governor's comments. But this is, once again, this is tomorrow. Okay, so today, right now, we don't have a hell of a lot to grasp, literally get your hands into. We have some German numbers here. If I just blow up the overall data that's coming out or expected today, there's a few bits and pieces coming out. Now, this is not extremely high impacting numbers by any stretch, but they can come into play. Now, some PMI numbers out of Germany, always interesting, as is the Eurozone numbers. Now, Euro is already sort of leaning to the downside. If we get weakness in both of these bunches of numbers, the market will start to get short or shorter in the euro. This could be the move we're looking for down through 111.50. And then also, if you put on top, we've got some US numbers down here, some PMI numbers down here. What you're looking for is strength in those ones, weakness in the other ones. Now we've got all the data moving with the general technical outlook for euro, and now we've got some good trading conditions. It's been a long time, or a while, since we could really find some numbers to hang our hat on. So make sure you're looking at those numbers. So that's going to be the start of the European session. You want to be looking at the German numbers, obviously, initially, and then the Eurozone. We may start to get some sort of move here. And if you're just having a quick look here at the dollar index, once again, it's doing the hard work, grafting through these levels. But you know what? It's above 97 and a half. So you've got to start to think, well, it's up here. There's a chance for it to break free. Obviously, strong data would be the catalyst. But look at dollar China. It's just drifting through these technical levels, which tells me there's no momentum, nothing going on. The market doesn't really have an opinion either way at that point. So that's where we are, guys. There's the equity markets sitting on the sidelines. Once again, it's a good signal to show you that there's no fear in the market just at the moment. So normal market conditions with that euro weakness dominating, and that's all you've got to. That's all you can tangibly focus on, right? You can't go around making up stuff. This is where the market is. Okay, euro weakness ahead of the ECB. Okay, to me that's starting to get tangible. These are the core market drivers, and once again, well done, Boris. All right, that's it from me for the FX Market Insight for today. Just relax. As I said, focus on euro crosses. That German and Eurozone PMI data could be the key for today's move. All right, guys, have a good one. Cheerio.